But we also have Chirag Jain, who's on the phone line with us to talk about those Eicher earnings. The stock had picked up a lot of momentum, but last few days it's given that up. And after yesterday's week show, possibly some more pressure could come in. Chirag, it was a stable set of numbers, but there was a bit of a concern as far as margins go, and more importantly, the guidance cut that has come in from Eicher. Put that in perspective for us.
Yeah, so the Q3 performance has been in line, but obviously it was anticipated to be weak, and that's what it has been. 4% decline in EBITDA for the first time in 8 years, and with volume decline of 6%. Obviously, margins have, for the past couple of quarters, have been weakening. They are at 29%, per se fairly strong, but they have been weakening from the 31.5% to 32% peak margins that they have been doing. Now, as far as this quarter commentary is concerned, I think for the first time, management has accepted the fact that they are witnessing demand-related issues, and because of which volumes are weak. And this is very contrary to the production-related issues that they have been mentioning over the past few quarters. So to that extent, obviously, they have reduced their production guidance again for this financial year, which would imply roughly 3% growth in the fourth quarter year on year. Yeah.
Right. So Chirag, going ahead as well, now if you have to talk about the compliance cost that would increase on the back of ABS from the fourth quarter onwards and the shift to BS6 as well in FY20, that is going to significantly increase cost for Royal Enfield bikes. Do you think that is going to actually impact the volumes and, exacerbate the volume slowdown as well?
As far as ABS is concerned, I think they are already behind. Almost 80% of the portfolio has already transitioned to ABS, and consequently, ABS-related price hike is already taken place. But yes, definitely, BS6 related emission norms, related cost hike would be there over the next 6 to 12 months, and that could further exert pressure on the volume trajectory. I think the bigger concern is not just the cost hikes, but more importantly, the brand fatigue that we are seeing for this brand. In fact, if I highlight, Maharashtra and Karnataka has been weak for more than 3 years now, and the volumes are down almost 30 to 50% over 3 years in terms of retail. And the weakness still continues over there. And more importantly, over the past few quarters, we have seen that weakness, the brand fatigue element spreading to the Hindi belt, which were relatively growing faster for Royal Enfield. And that's the reason we have seen the volume decline in the third quarter of 6% and even in January. I think the weakness in the Hindi belt has just started to begin. And to that extent, along with the regulatory-related cost hike, we would continue to see volume pressure for Royal Enfield over the medium term.
And Chirag, in terms of competition as well, do you think there is, competition which is creeping in from the premiumization that we're seeing from a Bajaj Auto or a TVS or even for that matter a Java? If you have to do a price comparison, is it competition which is eating away volumes as well?
Not really. In fact, in the third quarter, Eicher has just marginally gained market share in the premium motorcycle space. And even going forward, per se, yes, competition is increasing from brands like Java. But I think Eicher is still relatively big. They could see some market share loss because probably they are the only player, sizable player in 250cc above category. So to that extent, on a relative basis, there could be market share loss. But per se, I think competition is not an issue because the segment itself should grow over the next 3 to 5 years. So I think more than the competition, it is more company-specific issues, more with respect to the aspirational value of the brand, mainly because over the last 7-8 years, they have grown almost 15-20 times, and this brand is becoming more and more common on the road. So I think that is a bigger issue rather than the competition for the company.
Right. So overall, Chirag, on the way the numbers have panned out, even in terms of VECV, we have seen a muted quarter on the back of a weaker product mix. What is your call on the counter? And secondly, in terms of estimates, have you changed any earnings estimates as well on the back of the valuations?
Yeah, so we have been negative on this name for now more than 15 months. And we continue to remain negative. As far as VECV is concerned, obviously the performance was weak, and that was on expected lines because third quarter has been relatively tough for the CV space. But obviously that business contributes just about 7-8% to the total profits. It is largely driven by Royal Enfield business. And as far as our earnings are concerned, we were already below consensus by more than 10% on FY20 and 21. We have marginally tweaked down further by about a couple of percentage points. And we maintain a sell rating on the name.